Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China International Capital Corporation Limited Annual Report. China International Capital Corporation Limited provides a wide range of financial services to clients globally. The company operates in 6 key segments: investment banking, equities, fixed income, commodities and currencies, FICC, asset management, private equity and wealth management. The investment banking segment offers various services including equity and debt financing, asset securitization, sponsorship and underwriting of listings and refinancings, and financial advisory services for mergers and acquisitions. The equities segment provides investment research, sales and trading, as well as cross-border services to professional investors. In addition to these services, the company's FICC segment offers sales, trading, research, and advisory services in interest rate, credit, structured, foreign exchange, and commodity business. The asset management segment engages in social security and annuity plans, institutional and trusted investment management, offshore asset management, retail and mutual fund products, and services to investors. The private equity segment provides corporate equity funds, dollar funds, real estate funds, and infrastructure funds. Meanwhile, the wealth management segment offers trading and capital services such as margin financing, securities lending and stock-pledged repo, and product allocation services. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth are multifaceted and can be categorized into several key areas. Firstly, concentrating on core businesses and responsibilities has led to enhanced quality and effectiveness of services, resulting in significant revenue growth. Additionally, refining financial service models to support technological innovation across industrial chains has also contributed to revenue expansion. Furthermore, completing SciTech-related financial project transactions exceeding RM$0.3 trillion and launching corporate SciTech innovation bonds in the interbank market have been instrumental in driving revenue growth. The company's leadership in global IPOs for Chinese enterprises and China's M&A market, as well as its top market position in QFII business for 22 consecutive years, have also contributed to revenue growth. In terms of specific numbers, fee and commission income increased by 40% from RMB 12,571,143,462 to RMB 17,666,299,779, while investment income increased by 41% from RMB 10,120,725,368 to RMB 14,200,959,152. The company's domestic revenue increased by 13.1%, while overseas revenue increased by 49.3%. In contrast, the primary drivers of revenue decline are relatively limited. One notable exception is a 1% decrease in interest income from RMB 8,712,648,833 to RMB 8,650,660,459. However, this decline is relatively minor compared to the significant revenue growth achieved through various initiatives and strategies. The net income of a company underwent significant changes between 2023 and 2025. Initially, the net income increased by 71.9% to RMB 9,790.5 million in 2024 compared to the previous year. However, there was no change in net income from 2023 to 2024. In contrast, Zhesheng Jinhui's net profit/loss showed a drastic improvement, changing from a loss of RMB-317,898,948 in 2024 to a profit of RMB 10,795,564 in 2025. The changes in net income can be attributed to various factors. The initial increase in net income was likely due to an increase in revenue and other favorable business conditions. On the other hand, the stability in net income from 2023 to 2024 suggests that the company's performance remained consistent during this period. Zhesheng Jinhui's remarkable turnaround from a loss to a profit indicates significant improvements in its operations and financial management. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided information, the net cash generated from operating activities was a significant RMB 41,646.6 million in 2025. This substantial amount of positive operating cash flow is a clear indication that the company is generating sufficient funds from its core business operations. Furthermore, the operating cash flow status is explicitly stated as positive on page 243, reinforcing the notion that the company's operating activities are yielding a healthy cash inflow. While the operating cash flow from continuing operations was RMB 12,819 million, page 284, this figure is still a positive contribution to the overall operating cash flow. In conclusion, the available data unequivocally shows that the company is generating positive operating cash flow, which is a crucial indicator of its financial health and stability. The company's debt level and interest expenses have undergone significant changes over the past few years. One notable trend is the increase in total long-term debt securities issued, which rose from RMB 32,243,228,142 in 2023 to RMB 34,258,487,469 in 2024. And further increased to RMB 89,818,045,009 in 2025. This increase is accompanied by a rise in interest expenses, which jumped significantly in 2023 compared to previous years. However, there are also instances of decreases in debt levels and interest expenses. For instance, long-term debt securities issued decreased from RMB 2,745,593,503 in 2024 to RMB 2,295,804,905 in 2025, while short-term debt securities issued also saw a decline from RMB 615,821,918 in 2024 to RMB 3,042,719,452 in 2025. Additionally, interest expenses decreased from RMB 10,754,566,763 in 2023 to RMB 9,006,446,027 in 2024. Overall, the company's debt level and interest expenses have been subject to fluctuations over the past few years, with both increases and decreases observed. While there are instances of significant rises in debt levels and interest expenses, there are also periods of decline, indicating a complex and dynamic financial situation. The financial performance of various segments and regions within a company has been analyzed, revealing both strong and weak areas. On the positive side, investment banking, equities, asset management, private equity, and wealth management all performed well, indicating a robust growth in these sectors. In contrast, FICC, fixed income, currencies and commodities segment struggled, performing poorly. The others category, which includes other business departments and middle/back offices, also did not fare well, although specific financial data was not provided. Interestingly, certain income streams showed mixed results. Interest income and fee and commission income declined significantly, while investment income and other income, net, saw growth. Segment revenue and other income, however, experienced a decline. Overall, the performance of these segments highlights areas that require improvement and those that are driving growth within the company. Management is optimistic about the company's outlook due to improved fundraising environment and robust growth momentum in AI-related sectors. The company is emphasizing a client-centric approach to drive innovation and deepen long-term strategic partnerships. In terms of capital market growth, the company has posted remarkable gains in 2025 due to narrative shifts and a reconfiguration of the international monetary order. Opportunities still abound in China's capital market as medium and long-term reforms continue to unfold. The company is also expanding its global footprint by assembling an international talent pool and investing in domestic market development. Additionally, it is actively participating in the national dual carbon strategic goal and leveraging its financial industry strengths to promote green and low-carbon transformation. Management emphasizes effective risk management in creating value for the company, controlling market and credit risk exposures through various initiatives. The company has also changed its investment strategy, disposing of certain equity instruments resulting in a gain. Overall, the company is focused on driving innovation expanding globally, and promoting sustainability while managing risks effectively to create long-term value. The company has made several strategic moves through acquisitions and divestitures in the past period. In terms of acquisitions, the company purchased financial products from a related party, SDIC Securities Co., Limited, for a total of 107 million RMB. Additionally, it conducted a total return swap with the same related party for approximately 6.5 million RMB. On the other hand, the company has also engaged in divestitures to optimize its portfolio and reduce risk. It disposed of debt instruments at fair value through other comprehensive income, resulting in a gain of 294.2 million RMB. Furthermore, it sold financial products to two related parties, China National Investment and Guarantee Corporation for 20.3 million RMB and another related party for 20.2 million RMB. These transactions demonstrate the company's efforts to manage its assets and liabilities effectively. Based on the provided information, it is clear that the company has indeed paid dividends. According to the statement on page 136, the company has not only paid dividends, but also plans to distribute a significant amount of cash dividends totaling billion 544,722,197.76. This indicates that the company's financial performance has been strong enough to support dividend payments, which is a positive sign for investors and stakeholders. The fact that the company intends to pay out such a substantial amount in dividends suggests a commitment to returning value to shareholders. That concludes the financial summary for China International Capital Corporation Limited. Feel free to comment below, and I will be happy to answer them when possible.